Don't get derailed or distracted with the latest investment tip that isn't likely to work. This expert says one thing, the other expert says the other. What should you do? Multiple streams of income become multiple streams of distraction. Yeah, you heard it. Multiple streams of income can become multiple streams of distraction. You don't have to be an expert in real estate, oil and gas, the stock market, tax liens, options trading, cryptocurrency, and all the latest and greatest things hyped to get rich. Instead, learn to focus. Look, I owned oil and gas at one time. The way that worked was they sent me more bills for more drilling. They weren't sending me checks. I even had 2 pre-IPO offerings. One of them did okay. That was pure luck. The other one just went away. I had over 100 properties in real estate that I owned anywhere from 20% to 100%. And you know what? I also owned a full-time job with that crap. I even did a hard money lending fund. Had tons of complexity. I was pulled in so many different directions and I missed out on so much enjoyment. I was distracted during family gatherings. I remember we actually went to Arizona on a trip. I was closing real estate deals the whole time. I remember I had my whole family over to my house for the Super Bowl, and I was working on some, real estate project in Vegas at that point, on the phone the whole time, and it's Sunday. I can't even tell you how many vacations in my 20s this happened. And the reality was, it wasn't really building wealth, it was building distraction. And most distractions are gift-wrapped and disguised as opportunities. And if you get involved in so many things that you can't manage them, or you don't know how it works, or how it might pay off, it actually starts to be detrimental to your wealth, not helpful. Let's start to take into considerations other things like quality of life, investor DNA, that risk is in the investor, not just the investment, and that diversification is diversification when you spread yourself too thin. So let's break it down into 3 simple parts. First, what does wealth and money mean to you? Like, what's worth the money for you? Where does quality of life come into play for you? So when I say focus, I mean focus and don't diversify. I know that there's people that are going to be all fired up and pissed off that I just said that. So let's talk about it a little bit further. And don't comment unless you watch past this part, right? You have permission to focus if you handle your basic and most fundamental pieces. What are those? Transferring risk with insurance. So it's good to have high deductibles or high elimination periods before these insurances kick in, but insure the catastrophic events that could confiscate your wealth, and don't insure anything inconsequential that you could write a check for and still rest easy that night. The next thing is the basics that give you permission to focus, is build up your savings so you have a safety net and you have liquidity. I'm talking about savings in cash, in money markets, in cash value policies of insurance that aren't predicated upon the stock market. I'm not talking about retirement plans. I'm talking about money you could access tomorrow. The next thing is the foundational pieces is you never borrow to consume. Don't borrow to buy something that now has no asset or no cash flow attached to it. Also, part of the foundation is to be efficient. Save money on tax, save on interest, save on investment costs, on insurance costs. I have so many videos on just how to do that. I even look at the minimalist philosophy in my house, which is anytime I buy something, I've got to give something away. So if I buy a new shirt, a shirt gets given away. If I buy anything that's going to take up any space in my home, I got to gift or give away. A lot of times, like this is funny. We're having this family picture. And when I get to the family picture, I got my new shirt, my new digs on, and I look, and my dad's wearing an old shirt of mine, my brother-in-law's wearing an old shirt of mine, and my other brother-in-law's wearing an old shirt of mine. That's my buy one, give one. It's still getting utilized. If it's sitting in my closet, it's not. But by doing that, I get really strategic about buying something because is there anything I'm willing to give up? If not, I keep that minimalist approach and I hold on to my money. Value-based spending is absolutely going to be key for the fundamentals. Not accumulation spending or not just chasing deals. Value-based spending says, is it worth it to you? See, there's 3 measures of wealth. First is the price we pay. The second is the cost, which is the economics behind it. And the third is the value. Value is perspective. Value is, do you feel a feeling of satisfaction, joy, fulfillment? And if you do, then it's fine. It might be the right thing for you to spend money on and not someone else. But really make sure the juice is worth the squeeze. Make sure it's something that you want. And before you buy anything, give it a day. Give it a day before you buy. See if you still feel the same way the next day, and if you do and you have the cash to do it, then do it. So these are the fundamental pieces that if you handle it, you've transferred your risk, you've got your basics, you might even, if you have a business, you have a corporation set up or an estate plan, but once you have those basics, you have that foundation handled, now you can focus. When you focus, instead of diversify, you have less to manage and you stay aligned with what you know. So that takes me to part 2. Discover your investor DNA. To be minimalist, you've got to learn to say no. There's going to be so many money-making opportunities that come your way, but a lot of them aren't worth your time. They're not worth your concern or your worry. And if you start investing in things outside of what you understand, right? Like investor DNA is your core competencies. It's your core values. It's your core drivers, the things you want to pay attention to, you want to read about, not drudgery when you're looking at it, and then you focus on that. Say no to anything else, and this is really critical. So this is worth listening to more than once. When we invest in something that's away from our investor DNA, that we don't have competency in, we take unnecessary risk. And we take unnecessary risk when we chase a return that's not aligned with who we are. Now, this could mean someone else might make more money than you. Someone might have different expertise than you. But if you start getting into things because you go, well, so-and-so did it and they're smart, it's not the same for you as for them. When Warren Buffett buys a stock, he owns the whole company. He can actually implement a methodology. When we buy a stock, we don't own the company. We don't have say really in what happens with that company unless it's a private company we buy that isn't public. So be really careful at chasing something that's not aligned with who you are with your knowledge, because focus and investor DNA reduces risk, diversification spreads yourself more thin, and yes, if you have so much money that you've got to diversify because there isn't enough in one sector or one idea. And when I say focus, it might mean that you might buy multiple real estate properties, but of the same type of knowledge set. You're not buying stuff that you're lease optioning and then something else that you're auctioning off and then something else that's a commercial property and then something else that's residential and then something else that's fix and flip, and all of a sudden you have no expertise because there's not enough time to get great at all those things up front. Focus, maximize your returns, and make sure you protect your downsides, and then when there's so much cash that you don't know what to do with it, then investor DNA becomes key. Then increasing your financial knowledge. Then sitting on the sidelines and cash until you know what you're doing is essential. When there's complex structures, that are out there that might protect you, like going offshore when you get a lot of wealth, yeah, that might help, but it's not minimalist because it's require a lot of time and attention. If you want to go get a loan, it's going to be tough if everything's tied up in Nevis or the Cook Islands, and you're trying to, show the bank what's going on, and that first person doesn't really understand it. So make sure it's worth it when you get into those things. I only take advantage of tax advantages in the United States where I live. I don't take it offshore. I only have legal structures in the United States because I want to simplify. At one time when I owned 100 properties, I had 54 LLCs. Are you freaking kidding me? Just managing all those and do the compliance behind that was so freaking complicated, and now I have more wealth and less than five entities, one holding company and other ones that owns with the 3 companies that I own, and I don't have much real estate, just a couple lease options and the stuff that I live in, and I don't have hard money lending, I don't do IPOs anymore, I don't do technology investments I don't understand, and what it did was it freed up my mind, saved me time, and I actually was able to go hang out at my cabin for the weekend, have some hobbies, learn how to fish, learn how to make, become a whiskey sommelier. I know it sounds douchey that I do these things, but it's just fun. And so what can you do with that extra time? And so now you actually enjoy life along the way. You're not waiting till one day someday. So pick only a few things that you're good at, that you're interested in, and only invest there. Now, because passion can actually lead us astray when we're excited about something, utilize a team. Who can do some of the heavy lifting with you, who can disseminate and give you the most important choices and options, and you can leverage their expertise. And then have a team to help you do due diligence. So investor DNA, so you only invest in what you know, and a team that helps you say, yeah, but did you know this risk? And let's make sure we structure it right, and that you save a bunch of time. Now, if you go to wealthfactory.com/scorecard, I'm giving you a due diligence tool. This shows if something is aligned with your investor DNA. So it lets you know if the investment's right for you, or it might be something that you're just chasing a rate of return, so it helps you manage risk and understand your investments better. There's 10 awesome questions, and it's a great ranking system. I recommend looking at past investments and putting it in there, looking at future ones and putting it in there to see, is it right for you? So that way, you save time and you save money by not chasing something that was just a distraction disguised as a rate of return. The third thing, and you'll hear this if you watch any of my videos over and over again because it's essential. You've got to invest in yourself. One of the things that when you invest in yourself, you can make more money by doing only what you do best. I really record, I write, I create content, I speak on stages. That's where I spend my time. I delegate the rest. Or I eliminate things that could have made money, but take up my time, infringe on my quality of life, or keep me from being more of a minimalist where I can enjoy moments of peace, where I can have satiating experiences and conversations instead of constantly be torn in different directions. For me, part of this is I don't budget. No, I don't waste time on budget. I use mindful cash management. I look at my finances weekly or every other week. I don't borrow to consume, and I make sure I know where my money's going, and I automatically pay myself first so I could take the time I was wasting on scrimping and sacrificing in my early 20s and hustling to invest in myself, to have a daily ritual, to do things I enjoy along the way, and have the highest leverage activities that make the greatest impact and difference that are aligned with the things I want to do anyway. So look, it's tough sometimes. People are like, oh, there's this IPO. I go, ooh, that sounds really interesting. But I would only be doing it to make more money, but at what cost? Will I get distracted? Will I get derailed? Don't get derailed or distracted with the latest investment tip that isn't likely to work. This expert saying one thing, the other expert says the other. What should you do? Know who you are. Know what you want. And stay focused. Understand and discover your investor DNA. Distraction, that creates complexity. It takes time. And greed sets people off course. Only do a few things that you do best and handle the fundamentals. Take care of the protection and make sure that you know what you're doing. Now, you have the knowledge to transform your thoughts into profits and build the life you love. Looking for more on this topic? Check out my video on how to find and do work you love, the 4th myth of my 9-part Money Myth series. You'll learn how to find work that is more than a paycheck and is something you enjoy, while you make sure you're making money aligned with who you are so you have the energy and less distractions and enjoyment along the way. I'll see you there.